BlackRock was born in 1988, during an era of aggressive financial deregulation and economic transformation driven by Reaganomics in the United States and Thatcherism in the UK. The brainchild of Larry Fink, a former bond trader at First Boston, BlackRock emerged from the ashes of Fink's career setback when he lost $100 million on mortgage-backed securities due to interest rate miscalculations. Determined not to repeat the same mistake, Fink built a firm focused on risk management and deep analytics, emphasizing the use of data to forecast market movements. In its early years, BlackRock wasn't the behemoth it would later become. It was a modest firm offering advisory services and asset management to institutional investors. But the timing was perfect. The late 80s and 90s were marked by an explosion in financial instruments, global investment opportunities, and the rise of Wall Street culture. As mutual funds, pensions, and global investment vehicles grew, so did BlackRock. The company's emphasis on risk control technologies and data-driven strategies distinguished it from competitors in a market hungry for security amid rapid change. The global financial crisis of 2008 became BlackRock's ultimate proving ground and its launchpad to global dominance. As the world's banking systems collapsed under the weight of toxic mortgage securities, governments scrambled for solutions. It was during this chaos that BlackRock stepped in as the quiet savior. The U.S. Treasury and Federal Reserve entrusted the firm to manage and liquidate billions in bad assets, despite being a private entity with its own profit motives. While Wall Street icons like Lehman Brothers fell, BlackRock rose. The firm's massive asset management system, called Aladdin, became the most sought-after financial tool, processing risk scenarios and trading data for trillions of dollars worth of assets. BlackRock didn't just survive the crash, it embedded itself into the very heart of the new financial order. It advised central banks, oversaw rescue packages, and shaped the post-crisis regulatory environment. This marked a historical shift. Never before had a private company been granted such influence over the financial architecture of sovereign nations. In just a few years, BlackRock went from being a big player to a global powerhouse, too connected to fail, too powerful to challenge. At the core of BlackRock's global dominance lies a supercomputer system known as Aladdin, short for Asset, Liability, Debt, and Derivative Investment Network. Built in the 1990s and refined over decades, Aladdin isn't just software. It's a financial command center that watches over nearly $21 trillion in assets, which is more than the GDP of the Shua. US and China combined. What makes Aladdin terrifying to many critics is its reach. It doesn't only manage BlackRock's clients' assets, but also provides risk assessment tools to over 200 of the world's largest financial institutions, including central banks, insurers, pension funds, and sovereign wealth funds. Historically, no single system, not even during the height of the Rothschild or Rockefeller banking empires, has ever monitored or influenced so much capital movement. Aladdin runs tens of thousands of simulations daily, modeling interest rates, market crashes, climate events, political turmoil, and war, all to guide global financial decisions in real time. What we're witnessing, some argue, is not just a digital tool, but a technocratic empire, where decisions affecting global economies are increasingly guided by code rather than elected governments. In essence, BlackRock has created a form of digital omniscience, a Wall Street Skynet, that may already be too powerful to regulate or dismantle. As BlackRock's wealth and technology expanded, so too did its influence in global politics. But unlike traditional political powers, BlackRock operates in shadows. Over the past 2 decades, BlackRock has positioned itself as a trusted advisor, not only to the U.S. government, but also to the European Central Bank, the Bank of Canada, the IMF, and governments from Asia to Africa. In moments of financial uncertainty, nations now turn to BlackRock for rescue, guidance, and restructuring, placing the fate of public economies in the hands of a private corporation. This unregulated political reach has drawn disturbing comparisons to the British East India Company, which once ruled over millions with no accountability. In BlackRock's case, it advises on economic policy while simultaneously investing in or managing the assets those policies affect, creating massive conflicts of interest. For example, during the COVID-19 crisis, the U.S. Federal Reserve awarded BlackRock the job of purchasing bonds on behalf of the government, many of which came from funds managed by BlackRock itself. Critics call this the revolving door of ICE influence, as former BlackRock executives, such as Brian Dees, Adewale Adeyemo, and Philip Hildebrand, regularly shift into government leadership roles, blurring the line between state power and private finance. In historical terms, BlackRock may not be a nation, but it wields the power of one, without the burden of elections, transparency, or borders. BlackRock has aggressively branded itself as a global leader in environmental, social, and governance (ESG) investing, claiming to champion climate action, diversity, and ethical corporate governance. In annual letters, CEO Larry Fink urges companies to embrace sustainability and purpose, arguing that long-term profits depend on responsible behavior. But behind this carefully crafted image lies a web of contradictions that critics say reveals sheer hypocrisy. Despite its ESG rhetoric, BlackRock remains one of the largest investors in fossil fuel companies, including ExxonMobil, Chevron, and coal-dependent industries across the globe. It holds billions in defense contractors, surveillance technology firms, and pharmaceutical giants accused of unethical practices. This duplicity isn't new in history. Think of the Rockefeller Foundation, which donated to science and education, while Standard Oil was accused of monopolistic abuses. Similarly, BlackRock uses ESG to present a moral image while continuing to invest in sectors that directly undermine the very principles it claims to uphold. More disturbingly, the firm's ESG influence now shapes government policies, with some countries altering environmental strategies based on BlackRock's rankings, effectively outsourcing public governance to a private investor. Detractors argue that ESG in BlackRock's hands has become a PR weapon, not a tool for real reform, a Trojan horse that allows them to reshape the global economy on their terms while appearing as saviors. Perhaps the most disturbing fact about BlackRock is how ubiquitous it has become. Through its extensive holdings, especially in ETFs, exchange-traded funds, BlackRock is now a major shareholder in almost every major publicly traded company in America, from Apple, Amazon, and Google, to JP Morgan, Pfizer, and Coca-Cola. It owns significant shares in media companies, defense industries, banks, tech firms, real estate developers, and even rival financial institutions. Alongside Vanguard and State Street, BlackRock forms what many experts call the Big Three, an unholy trinity that collectively manages over $20 trillion in assets and dominates 90% of the S&P 500. This creates a new form of capitalism, one that is passive in appearance but absolute in control. Historically, monopolies like Standard Oil or U.S. Steel had visible influence. BlackRock's power is silent and systemic. It doesn't control companies through direct board management, but through ownership shares, voting rights, and index design, subtly shaping corporate strategies from behind the scenes. Worse still, passive investing allows them to claim they're just following the market, while their ownership of the market gives them the power to set the market itself. In effect, BlackRock doesn't just own stocks, it owns the system, operating as a financial overlord in a world that never elected it, never regulates it, and can't escape it. In recent years, BlackRock has entered one of the most sensitive sectors of all, housing. Across the United States and parts of Europe, the firm and its affiliates have quietly purchased entire neighborhoods of single-family homes, often outbidding individual buyers with cash offers that ordinary working families simply cannot compete with. This practice, known as institutional home ownership, has made BlackRock one of the largest landlords in America, and it's changing the fabric of society. Historically, home ownership was the foundation of the American dream and a primary way for the middle class to build generational wealth. But BlackRock's aggressive real estate investments are helping turn that dream into a permanent rental class. Critics argue that by converting owner-occupied homes into corporate rental assets, the firm is contributing to skyrocketing housing prices, declining affordability, and neighborhood destabilization. From a historical perspective, this is a return to feudal dynamics. Only now, instead of a local lord, it's a global algorithm deciding rent, evictions, and home values. BlackRock's defenders say they're simply meeting market demand, but others see a darker truth. The firm is turning shelter, a human necessity, into a speculative commodity, pushing millions into long-term dependence on corporate landlords, who answer only to shareholders, not citizens. Beyond finance and real estate, BlackRock's tentacles extend into the most controversial sectors of global power: military contracting, surveillance technology, and authoritarian governments. Through its massive investment portfolios, BlackRock is a top shareholder in weapons manufacturers like Lockheed Martin, Raytheon, Northrop Grumman, and General Dynamics, companies whose technologies are used in conflicts from Ukraine to Yemen. It also has financial interests in firms tied to facial recognition, spyware, and digital tracking technologies, many of which have been linked to human rights abuses in places like China and the Middle East. Historically, this isn't new. Corporations have long profited from war and repression, from Krupp's role in Nazi Germany to IBM's role in apartheid-era South Africa. But what makes BlackRock different is its scale and deniability. The firm doesn't build the weapons or software, it just owns the companies that do, allowing it to profit without public accountability. Furthermore, BlackRock invests heavily in sovereign bonds, including from countries with authoritarian regimes. While preaching ESG values, it remains financially entangled with governments accused of mass surveillance, censorship, and even genocide. As a result, BlackRock has been accused of empowering global authoritarianism through silent capital flows, reinforcing state violence while publicly promoting inclusive capitalism. It's a paradox only the modern financial age could produce: a company that claims moral leadership while profiting from the machinery of global control. At the heart of BlackRock's dominance lies a new form of power that transcends money. It's the power of technocracy, where data, algorithms, and artificial intelligence quietly make decisions that shape billions of lives. BlackRock's Aladdin system processes over 250,000 investment portfolios and simulates millions of market scenarios daily, guiding financial strategies for governments, corporations, banks, and pension funds. The system is so integrated that many policymakers and financial executives rely on it without fully understanding its inner workings. This creates a dangerous dependency: a digital brain making decisions no human committee could replicate in time, leading to a reality where elected leaders and regulators are no longer the true decision makers. Software is. Historically, warnings against unchecked technocratic control date back to the early 20th century. Thinkers from Aldous Huxley to George Orwell imagined futures where human freedom is overridden by systems built for efficiency. BlackRock's rise may represent the real-world manifestation of those warnings. It's not a government, yet it influences monetary policy. It's not a regulator, yet it monitors risk for the entire global economy. It's not a tech firm, yet its algorithms shape markets, interest rates, housing prices, and even climate models. The concern is not just that BlackRock is powerful, it's that it has built a self-sustaining machine that governs without democratic oversight. In this emerging order, citizens become data points, markets are simulated environments, and real-world consequences, such as economic collapses or housing crises, are mere variables to be optimized. It's no longer just finance. It's algorithmic control over civilization itself. As BlackRock grew from a risk management firm to a global juggernaut managing over $10 trillion in assets, it passed a critical threshold. It became too big to regulate. Despite holding tremendous influence over stock markets, housing, infrastructure, and national economies, BlackRock operates in a regulatory blind spot. Unlike banks, it isn't subject to the same capital reserve requirements. Unlike governments, it isn't answerable to voters. And unlike traditional corporations, its sheer scope means that any attempt to regulate it could destabilize the very markets it controls. This isn't just a modern problem. History has shown that when entities grow too large and too embedded within the system, like the East India Company in the 18th century or Standard Oil in the 19th century, they begin to operate above the law. What makes BlackRock even more elusive is its ability to place former executives in key government positions, such as Brian Dees as director of the U.S. National Economic Council, or Adewale Adeyemo as Deputy Secretary of the Treasury. This revolving door makes regulation not only difficult, but in many cases impossible. In practice, BlackRock helps write the rules that are supposed to limit its own power. It advises central banks while also investing in markets affected by those banks' decisions. It provides financial advice to governments even as it buys up public infrastructure. In effect, it acts as a state within a state, an unelected, unaccountable authority that shapes the rules of the global economy while answering to no one but its shareholders. The danger isn't just what BlackRock has become, it's that there's no mechanism left to stop it. As BlackRock's reach stretches into every corner of modern life, from the homes people live in, to the air they breathe, to the wars they unknowingly fund, public backlash has grown. In cities like Berlin, Paris, and New York, protests have erupted outside BlackRock's offices, with demonstrators decrying the company's role in housing crises, climate destruction, and political manipulation. These aren't just isolated outbursts. They reflect a growing global consciousness that the true rulers of the modern world may no longer be governments, but corporations like BlackRock. What we are seeing mirrors moments in history when populations rose against unseen empires. In the 1600s and 1700s, the British East India Company drew similar outrage for extracting wealth from colonies under the guise of trade. In the late 1800s, labor revolts broke out against railroad barons, steel magnates, and oil tycoons whose monopolies crushed workers' rights and communities. Today, BlackRock is being viewed in that same light, not as a business, but as a machine of economic imperialism, operating without borders or accountability. Youth activists accuse the company of greenwashing, while housing advocates blame it for pricing ordinary families out of cities. In Latin America and Africa, governments are beginning to scrutinize BlackRock's influence over national debt and infrastructure. But the challenge is immense. BlackRock does not stand alone. It is protected by a network of financial institutions, legal frameworks, and complicit governments, making resistance difficult and costly. Yet the protests mark the start of a reckoning, a 21st century struggle to reclaim democracy from the clutches of unchecked financial power. BlackRock is not a bank. It's not a government. It's not a tech firm. Yet it operates as all three, combined. A silent empire with no borders, no elections, no military, and no face to blame. Its power lies in its invisibility. People don't vote for it. They often don't even know it exists. Yet it helps determine which homes are bought, which wars are funded, which companies thrive or collapse, and which policies shape the future. Historically, empires ruled through armies, flags, and colonies. Today, BlackRock rules through data, debt, and ownership. It is the embodiment of a new world order where capital replaces sovereignty and algorithms govern more than elected leaders. And while some praise BlackRock for bringing efficiency to global finance, others see it as a terrifying blueprint for corporate totalitarianism. Is BlackRock the most evil business in the world? That depends on how we define evil. Is it intent or impact? Because while BlackRock may not seek to destroy lives, its influence on housing, climate, inequality, war, and democracy suggests a system that puts profit above all else, even humanity. In the end, the danger isn't just BlackRock. It's the system that allowed it to become what it is. A titan too big to fail, too powerful to challenge, and too deeply woven into the global fabric to ever be truly confronted. Unless we rewrite the rules of the game.